Yo, yo, yo. What's
Back
going on?
again, back again.
Tell your friends, tell your friends.
Another one.
Episode 16. Small. I feel like that's the most exciting part for episodes. Like,
Saying what episode
right?
number, right? People like, dang, episode 17 already?
Each episode we're just counting. You're like, wait, we're doing something. But
As
no,
if it's
yeah.
not like every 2 weeks we come here and sit down and do this.
It's the routine now, so we shouldn't
Yeah.
feel too surprised. It's the routine.
Facts.
How
You
you
know,
feeling?
what it is because early on we weren't moving like this. So now it's surprising.
Yeah, that's
Early
right.
on it was, don't let me cast us, but it wasn't 2 weeks.
We got a little motion now.
Yeah, a little bit. How
That's
you
what's
doing?
up.
How you
That's what's
feeling?
up. Can't complain. Life is going, market is going. Trying to make money out here. You some brokies.
Until one day when we get it and it's gonna be over.
That's the goal. We're trying to make it in this market, make wealth, build financial freedom for our family. And so at the end of the day, it's gonna work out for sure.
Yeah. I mean, you only fail if you give up. As long as you don't give up, you can never fail.
Hey,
That's great advice, but it's also terrible advice.
it's like last. Don't give up. Just keep
Well,
going. Keep
at least
going.
you never win, but you never lose.
But one thing I feel like, even like with this, I feel like it helps us even in our day to day, like in terms of like when it comes to investing as well. We have to have the knowledge that we're speaking about, so we have to apply it ourselves. So like,
Speak for yourself. This stuff don't help me. This just stress me out. No, you're right. I do definitely like dot my I's and cross my T's before I get on the internet and start talking about stuff for sure.
before, thankfully we're not that level where people are gonna start roasting us or anything, but just in case.
I mean, if they want to roast, come on. All publicity is good publicity. I'll take the engagement. Maybe we should rage bait the internet just for the, at least our followers will know that we did it intentionally.
Just for like to put that out there. Like, Dami is a rage baiter on here. I'm not part of that. So if you want to attack somebody, just go at him. I don't need any of that.
This supposed to be my partner. This supposed to be my soldier. That's crazy. Left me on the battlefield.
I would protect you like from like engaging in that. But once you're already like in the rage bait, I can't help you. I can't.
Otila.
Otila.
It's gone. All right. Noted. I'll keep that in mind.
All right, cool. I did want to ask you, so concerning what we're going to talk about today, when would you say you start using like stock charts to actually make investing or financial decisions?
Good question. So I would say for me, I've been looking at charts for a good amount of time, but as far as actually using them the proper way, because I was using them from the beginning, but I wasn't using them well.
So just vibes.
It's like the dishwasher in most African homes. You just put plates there. You don't wash plates there.
Yo,
So
facts.
I wasn't using the charts well. I'd say 2023 was when I was like, all right, these charts are making sense to me. I know what I'm looking at.
Yeah.
Everything is everything. But prior to then, I thought I knew what I was doing, but I was not.
Nah.
What about you?
Nah, yeah, I think the same, honestly. Like you said, I used to think I knew what I was doing with the charts, but when you see actual like real charting or like actually seeing people like make real market decisions just by looking at the charts, you're like, wait, this is a whole different level. Just even like the terminologies that they use, that's like a whole different level. But like initially, it was more of just like what are good stocks to buy. I wasn't really looking at entry levels or price targets or pullbacks or anything like that. It was just like, is it a good company or not? Do I have money to buy the stock? Okay, buy it. But it took me a couple years to realize that the price that you enter a stock is very important. Figuring out what the uptrend is for a particular stock, if it's pulling back, if it's at a discount, those are things that you can get from just looking at the stock chart. So that made me like kind of deep dive into that to, I guess, get better when it comes to those technicals.
Honestly, I mean, both of our responses are not that wild. As with anything in life or anything worth doing, it's going to take you some years or it's going to take you time to get it right. So I don't think it's that crazy to say that at all.
Yep. Well, for our listeners today, you're in luck because we're going to touch on that today. Welcome to episode 16 of Common Sense Pod, where we are documenting our journey as two first generation Nigerian-American millennials trying to figure out financially. Hopefully, we can all learn a thing or two as we embark on this journey and share our experiences. I'm your host, Umar, and with me is my co host, Dami. Before we get into today's episode, make sure you follow, share, comment, like our videos. It's one of the best ways you can support what we're doing and keep the content coming. Today, we're going to be talking about how you can interpret stock charts, the components of a stock chart, some of the indicators that are important for you to better understand what a stock chart is. We're also going to be going over where some best practices and some mistakes you should avoid when looking at stock charts. After that, we're going to go into everyone's favorite segment, Is It Making Sense? Where we bring up real life or made up scenarios involving our topic today, and we decide if it's making sense or not. And then after which, we touch on economic events that caught our attention and we feel like our listeners should be more informed about. With that being said, let's get into today's episode. All right, so this is one that I'm pretty excited for us to do because honestly, I feel like if I had this resource starting off, I would have been in a way better position when it comes to my investments, when it comes to like the prices I bought stocks or even stocks that I shouldn't have bought at all. I would have been able to decide if these were good stocks or not. So, like I said, we're going to be talking about how we can understand stock charts because that lets you know what position a particular stock is, whether it's in an uptrend or a downtrend, if it's at all-time highs, if it's a good entry level, if it's at its support, or if it's at its resistance. These are some of the things that we're going to touch on just to get a better understanding because with all this information, it allows you to make better decisions, make more money, and save you from losing money in the stock market. Like we always say, we're not financial advisors. We're just two guys on the internet talking about our experience and things that we've learned from investing in the stock market. And so if you don't like what we're saying, maybe find another video to watch on YouTube. But with that being said, Dami, what would you say a stock chart is?
So if people were to respond to your go watch another channel, would that not be rage baiting? I'm just asking for the people.
We're not doing. I said we need some rage bait.
Okay, I'm just making sure we're on the same page because that's something I would have said.
You know, you're rubbing off on me. What can I say? Oh, pause.
Hey yo, man, that's funny because I said something at work today, and I said pause. My coworker was like, "Dude, you gotta chill." Like I wasn't even thinking like that. I was like, "Man, it's a really bad habit. Now I can't
No,
say
but like
nothing."
when you catch yourself saying something, you're just like, oh
You
wait,
just gotta
that was
yeah,
weird.
catch
That was
yourself.
weird.
Yeah,
But
yeah. Dirty ears, dirty ears. All right.
yeah.
So you asked me what is a stock chart? Is that what you asked me?
Yep. Hmm.
So a stock chart is basically just historical prices of a particular company or ticker. Think of a stock chart as like a heart rate monitor for a company. A heart rate monitor doesn't tell you why your heart is racing. It only tells you that it is racing, it's up, it's down, it's beating fast or not. So the same thing with a stock chart. It doesn't really tell you why a company is doing what it's doing. It just tells you when the company's doing well, I guess, or when the price is going up, when the
Yeah.
price is going down, and when the price is stagnant. So that's really what it is about a stock chart. Um, what a stock chart helps you identify is when you should invest in a company. So we talked about fundamentals in one of our previous episodes, and fundamentals help you identify where to invest or what to invest in.
What to
So
invest
you
in?
find
Yeah.
your good companies, like your top, I'll just say Nvidia because it's a top market cap company. Nvidia could be a good company that you discovered due to their fundamentals. And then when you look at the chart, you find when you want to invest in Nvidia, whether it's at price X or it's at price Y, but you're able to identify that through the stock chart. That is that for what a stock chart is. Why does this matter? Or why are stock charts important for investors?
All right. The reason why it's important is for people to do the most important thing when it comes to investing, not losing money that you invest. The point of the game is try to minimize your losses as much as possible. Like not there's obviously going to be losses. There's going to be some investments that don't work out, but you want to minimize that as much as possible. And so by looking at stock charts, that lets you understand when you should buy to minimize that risk. Take for example, one thing that we've always talked about is that you don't want to buy stocks at all-time highs because the reason why is that at all-time highs, that's usually when previous investors are going to liquidate, are going to take their profit. So what happens when they take their profit? The stock is going to come back down. It's going to come back 5, 10%, however much it comes down. So imagine if you bought it at that all-time high. When it does come back down, you're going to lose money right away. You're going to lose about 5-10% of your money that you already put in. What if you waited for that pullback to happen and now you're part of the investors that are now making money back on this on the way to the top? Now you save yourself however much you put in the market at that point in time. And so that's one of the things that being able to read a stock chart helps you do. Find better buying opportunities when it comes to buying a particular position. So that just goes back to identifying good discount opportunities on the stock market as well. Another reason why looking at stocks is important is because it shows you the ebbs and flows of a particular stock. And so if a stock pulls back, if you know that this is normal for this stock to pull back 2% monthly or pull back 5% monthly, you're not going to be scared and be like, okay, I invested in this, let me take my money out. Once you see that there's this ebb and flow to the chart, especially like the stocks that could be volatile, you know that this is not a drastic pullback. And so if you leave your money in that stock, you can ultimately recover from that pullback. But if you take your money out because you didn't know that this is a volatile stock or there's possibility for this stock to pull back 10%. Let's say early Tesla or even Tesla now, that's like a volatile
Just
stock.
now.
Yeah,
Yeah.
exactly. And so it's like for a normal investor, like if you didn't know that Tesla pulls back like 10% and like is going to recover from that, you take your money out and then you're ultimately taking a loss at that point in time. And so understanding like these ebbs and flows to the stock based on this chart, that lets you be more resilient when it comes to investing. So I say those are some of the reasons why understanding or looking at stock chart is important. So I did want to ask you also because majority of our listeners I feel like are probably long-term investors because we talk about investing for the long term, but we also have people that do short-term investing because I know both of us, we both do options. And so what would you say the difference between looking at a chart as a long-term investor and as an option trader is?
The main difference that comes to mind is when an investor is on a chart, an investor is looking for a price for which they want to buy an asset and
Yeah.
hold on to that asset long term. So most of the times, investors are waiting for a pullback to a certain point, whatever your threshold, whatever your number is, whether it's 5%, 20%, or if it's a particular indicator. Investors are waiting for a price to hit a particular point so they can buy it and ultimately hold it onto it forever or for whatever designated period. Whereas for traders, traders are not necessarily looking to enter their trade when the stock is going up or when it's pulling back. They're looking to enter a trade at a point where they predict or assume that it will move within a short period of time or whatever period of time is. So they could be buying it at a high, hoping that it goes down, or they could be buying it somewhere at a low, hoping that it goes up, either direction.
Hmm.
And another thing about where traders use charts is because traders, a trader is looking at where they're going to enter the trade as well as where they're going to exit the trade. Someone who's investing in the stock market, long-term investor, is not necessarily looking at their exit.
The exit.
They may have an idea for where they want to get out the trade or where they want to get out the stock. Like if it gets down to this price, I will sell. But they're not necessarily looking for where they're going to exit. They're looking for where they want to get into it and hold it for the long term. So that's the main difference between how a trader might use a chart as opposed to how a long-term investor will use a chart.
That's a good breakdown. I feel like we know that both investors and traders have different strategies. So knowing that there's different ways to look at charts, that as I think as we go into the episode, we will talk about that as well. So good point
Hmm.
out there.
Yep. So let's talk a little bit about the anatomy of a chart. We're talking about charts. Obviously, this episode is about charts. There are various components of charts. There are various things that we look at on charts. I would say before we even get into some of those components of the charts, you probably want to start with time frame because you want to know exactly what you're looking at. You got to understand what you're looking at. What do I mean by time frame? Stock charts exist on different time frames that show different things. We can be looking at a daily chart. You can be looking at a monthly chart. You can be looking at a 5-minute chart. And these are all showing activity at different time levels. So on a 5-minute chart, you're seeing what's happening every 5 minutes, whereas on a daily chart, you're seeing what's happening every day. One thing to note about time frames is that the higher the time frame, the more significant the move is. So if a stock is pulling back on a daily chart, versus if a stock is pulling back on a 5-minute chart, the daily one is the one you should pay attention to because that's happening over the span of a few days. Whereas
Mhm.
on the 5-minute chart, it could just be happening over the span of 5, 10, 15, maybe 30 minutes.
Yeah.
But that does not compare anything to what 2 red days on a daily chart shows. That's the main thing with time frames. That make sure you understand how to use time frames and how to align it best with your investing or trading strategy. Let me pass it over to you so you can introduce a different component when it comes to reading charts.
Definitely, definitely. I mean, I think starting off, like you said, time frame is an important one. So when it comes to charts on the horizontal axis, you have the time frame. So whatever time frame that you're looking at, and then on the vertical axis, that's is when we have the prices. And so, like any chart, stocks have their own charts. And then, so I'll say there's three main types of charts that we have. You have your line charts, where it's just a single line going from the point on the previous time frame to the price on the next time frame. You have your bar chart, and then you also have your candlesticks. Today, we're going to be focusing mainly on candlesticks because personally, that's what we both use. Also, because I feel like that's the one that you can get the most information from, which can help you get more information when looking at stock charts. I feel like this is going to be one of those episodes where we're sharing a lot or just doing more visual representation. And so let me share uh, what a candlestick looks like. All right. So for those people that are not so familiar with candlesticks, this is what a candlestick looks like. So here we have both a bullish candle and a bearish candle. So the bullish candle is a green candle and the bearish candle is a red candle. For each candle, you have the rectangular body. And so this pretty much is the time frame from which the stock opened and closed within that particular time frame. So Dami talked about time frames already. So let's take a daily chart. So one candle will represent a whole day. If we're looking at the hourly chart, one candle will represent an hour. If we're looking at a monthly chart, one candle will represent what did the stock open at the beginning of the month and what did it close at the end of the month. And so for a bullet candle, the open is always the bottom of the rectangle. And then the close is at the top of the rectangle, meaning that it closed higher than it opened. And then a bearish candle is the opposite. The open of a bearish candle is on the top part of the rectangle and the close on the lower part of the rectangle, meaning that it closed lower than it opened, hence being bearish. And then after you understand what the top and the bottom of the rectangles are, then you have the wicks. So the wicks are these lines atop of the rectangle, similar to a normal candle. The wick shows how high or how low within that time frame the stocks moved. And so here on this bullish candle, this shows how high did this stock move at that particular time frame, or how low did the stock move at that particular time frame. Same thing with the bearish candle. How high did the stock go and how low did the stock go? So that gives you more information, because most times when whatever the stock open or closes out, that's not the highest or lowest point within that time frame, and that's what that stock is showing. And so from there, you basically have 4 price points with one candle. You have the open, the close, the highest point, and the lowest point. Those are important information to use when creating like your support levels or anything like that, which we're going to get into later on. But some things that I did want to show is the different types of candle patterns that we have, because that's a whole different conversation. We can honestly have a whole episode on that, but I'm really just going to go into some of the common ones that we see. So here, this is one that you might see a lot. So this is called a doji. A doji is where the body is little or non-existent, meaning that the open and the close are relatively the same. What that means is that there's no clear direction in the market. There's both buyers and sellers at this point in time. And so there's no clear direction as to what's going on with this stock. You can't really make much of a decision with this. You have to usually wait for other time frames to understand what's really going on with this stock. So if you see anything like that, just remember that's called a doji. Another one I wanted to highlight is a hammer candlestick pattern. So this is where you have a small body, a small rectangle at the top part of the rectangle, and then you have a long wicks at the bottom, which looks like a hammer. You mainly see this at the bottom of like a downtrend, signaling a reversal. Hence, that's why they call it a bullish candle. But pretty much what's going on in this situation is the candle opened, right? And so you saw that previously to that, you had sellers in this position. And so now there's a lot of sellers in this time frame. And that's why you have such a long candle wicks. But what happened is that the buyers took on that pressure and then took the price back up higher than what it opened at. And so when that happens, that's showing you that, okay, for some reason, buyers really stepped in this time frame. And so that's why the people say that this usually signals a reversal, meaning that there's a lot of buyers here. This might mean that the stock is back on the uptrend. Something similar to that is also the inverted hammer. It's the same thing happening here. It was a downtrend. Buyers stepped in, which took the stock high, but then sellers tried to pull it back down, but they couldn't get it back to a bearish candle. And so that means that there's buyers in this position. So these are both bullish candles that if you see this can signal a reversal from previous downtrends that's been happening. And then so on the opposite side, you have the hanging man. This is pretty much the opposite. So now let's reverse the scenarios. We have an uptrend where we have three bullish candles, and now because we've been bullish, there's now sellers are stepping in because they're trying to take profit in the situation. And so you see that we have that long wicks is pulling down. The buyers try to step in to take this candle back up, but this time around, instead of like it being a hammer candle, the buyers weren't able to close this above the open price at this time frame. And so now you have a hanging man. And so this means that, okay, wait, hold up. The buying pressure has reduced, and then this can signal that this is probably a bearish trend that we're going to see moving forward. So those are some of the candles. Another one that I did want to highlight. So if you look at charts, you've probably seen something like this as well. So this is the bullish Marubozu. I think I said that right. But here, this shows that this is completely controlled by buyers. There's complete buying control, meaning that it opened at the bottom and then closed at the top. There was no wicks. The
There's no
highest,
resistance from the other
yeah,
side.
exactly. This is the maximum distance, meaning that this was all buyers and this is pushing the stock all the way up. And then the reverse is the same, where you see the bearish Marubozu, meaning that there's strong selling pressure. And so whenever we have those days where there's like 5-10% pullbacks in the market, you see candles like this, meaning that it's like an avalanche just falling. The stocks is falling. People are selling their stock. So that candle is signaling that this was the lowest point, and then it's that price target is weighed. It has a wide range of price difference from how it opened. So those are the different candles that we have, and this is just looking at single patterns. So like I said, we can have like a whole episode on this where we look at 2-bar patterns, we look at 3-bar patterns. I'm definitely going to put this link in the description. So definitely, if you're interested, check it out. But that's just so starting off. These are some of the candles that once you see, they give you an idea of what's actually going on with that stock, and it provides a lot more context for people to understand and make better decisions. But yeah, that's pretty much all I wanted to show on the candles. So hopefully you have a better understanding of what candlesticks are.
That was good. That was good. I really like the avalanche comparison because that's
Hmm.
exactly how it looks when the stock market is dropping. It's really like an avalanche. It's just like falling. If you ever watched those red days, I mean, I'm pretty sure you watched it. If you look at the candles, that's exactly what it looked like.
Yeah, for sure, for sure.
Cool. All right. So let's continue our conversation and we're going to go into support and resistance. So I will share my screen here. I know we've talked about support and resistance on our previous episode, but it's part of a component, I guess, of interpreting a stop chart. So
Hmm.
I'll go over this. What we're looking at right now is meta chart. This is meta till date, till today. So what you can see is that meta is currently in a downtrend. This is an hourly chart. And I'm going to be using this to explain support and resistance for you. So if these lines weren't on this chart, it would look something like this. There wouldn't be too much rhyme and reason for what's going on. It would look
Hmm.
something like this. But now that we have these lines that I drew here, this is our support and resistance lines for the channels in which the price is trading right now. First things first, we have support. Support is like the floor that is under you when you're standing. So think about if you were to release a basketball or a baseball from your hands, what's going to happen? It's going to hit the ground and it's going to bounce back up. So that's what support is when looking at charts. Support is the floor beneath a stock that keeps it up. And then we have resistance. So same example, if you were to take a basketball or soccer ball and kick it or throw it to the ceiling, what's going to happen? It's going to bounce right back to you. Don't tell me it's gravity, please. I'm trying to make an example. So it's going to bounce right back to you. And that's what resistance is. When price goes up to lines of resistance, it tends to reject or bounce back from there. Like I mentioned, price tends to move in channels. It's one thing I like to say. Price actually moves within channels bounded by resistance up top and by support down here. So what you'll notice here is that, is it to a T? No. But for the most part, price is respecting this channel.
Mhm.
When it goes up, it comes back down. And when it comes down, it goes back up. And it's just going between these two lines until eventually it breaks through. So one thing about support and resistance is when you break through one of them, it flips to the other. What do I mean by that? So this was previously our line of resistance. When we broke through our resistance, it now becomes support. And the support is holding the stock here up until it didn't. It wasn't able to hold here and we broke down and we came back down to our previous support. So think of it like this. If you're in a hotel room, if you're on the fourth floor and you decide to cut a hole like cartoon style into the floor and you jump into the hole, what now happens? Now you're on the third floor and the floor of your previous room is now the ceiling of your new room. So that's the same thing with the stock market. So we're down here. We broke through this resistance again, but notice this time when we didn't hold, we went down through this support and we went down this support. So this was previous our support. It is now our resistance at this point. Same thing here, broke down to it, held here, and this is now our new resistance. So that's generally how stocks move. And one reason why support and resistance is important is because it helps you identify trends overall. So if you look at it, if I zoom out a little bit, you're able to see that we are in a downtrend. These lines add a little bit of context. You can see where the stock goes up. This was a low here. We went up and then we came back. Now we made a new low. And we came back up. Notice how this is not as high as this. And notice how this is lower than this. So what is probably going to happen next? I don't know. But if I were to guess, we continue going downwards and we make a low that's lower than this one right here. But no one really knows. But because I'm able to interpret a chart, I can at least make an educated guess on this. So
Mhm.
that's the importance of support and resistance. That's how we use it to identify trends in the bigger picture when looking at stock charts. So let me unshare my screen.
But real quick, I don't know, I was just thinking about Tom and Jerry when you said cut the hole in the
Yeah.
hotel. So that was
No, that's exactly
but
what I was
okay.
thinking of when I said it.
But one thing I did want to point out with the chart as well is that, so let's say if you can like zoom in again a little bit more. So one thing about like support and resistance is that whenever support is going to become a resistance, or whenever resistance is going to become a support, you usually see like there's a high volume move or like an extreme move. So like,
Yeah.
I don't know, but yeah,
No,
like you
so
can
I got
highlight,
you. Right
yeah.
here.
So like, you can see
Uptick
that
big move.
whenever it did
Yeah.
break any of those support, it did it drastically, because like, okay, now it's like it fell and now there's nothing to hold it back. And so it's going to fall a lot more. And so that's something you see when it comes, yeah, exactly. Like right there. Yep.
Mhm.
Yeah.
Specifically, especially to the downside. If you see volume with red candles, you're probably going to fall a lot. To the
Hmm.
upside, sometimes it requires a little bit more,
A
but
little
that
bit
was a good
more.
thing to, yeah, that was good to point out.
Yeah.
Yeah, when you see a lot of volume, when you're breaking through support and resistance lines, the volume helps support that move, and it gives you a little bit more confidence. So good
Yeah.
thing, good call out there. All right, now back over to you.
Well, I think that is a good transition to the next part of the stock chart, which I feel is very important as well. And then honestly, most people ignore this one, but it is volume. So volume is what confirms a move, as we've seen on that chart that Dami showed. But pretty much what volume is, the number of shares of a stock that was traded during a given time period. So it could be either bought or sold. That's the number of those transactions that are happening during that time period. That's what that volume is. And so volume is what honestly controls the price movement. It shows you, it gives you more conviction as to what's going on with a particular stock. Take, for example, a stock goes up 5%, but it has low volume, compared to a stock that still goes up 5%, but it has high amount of volume. which one do you have more conviction in? Is the one that has high volume because you know that one, a lot of buyers are in this position, and also because there are more buyers, is it has a lot more runway for it to continue going up. And so that's why volume is very important. One comparison that I like, I usually compare like volume to like Instagram followers, for example. So honestly take our podcast for example. There are a lot of like financial podcasts out there, but we're up and coming. We don't have a lot of followers. We don't have a lot of volume. But take another channel that has. I'm not going to throw any names out there. I'm not giving anybody a
For
shout
free
out, but
promo. Yeah.
exactly free promo. But like other financial channels, the reason why you're listening to them is because they have more followers. And so if those platforms that have more followers say something, you're probably going to believe that more because one, they have more followers, meaning they have more people that believe in them. And so if people believe in them, you're more likely to believe in them as well. But for us, if we're saying the same message, you might not believe us because we don't have a lot of followers. There's no confidence for you to, there is no like followers for you to feel confident in what we're saying. So it's the same thing with volume. So if a stock has good volume, you're going to feel more convicted in what the stock is actually telling you. So yeah, I did. So let me share this chart actually, so we see what volume looks like. All right, so I wanted to show ASTS. If you don't know ASTS, it was a space stock. But pretty much I wanted to show this because this is also a very volatile stock. So it moves quite wildly. And so if you're invested in it, you know that. But pretty much we can see that volume, and this is just a year chart, but let me go back. Do you want to draw this price?
Side
All
note
right. So we can
for
see
our viewers and for you too. TradingView is doing a sale right now. For anyone that's interested, I'm pretty sure
interesting.
TradingViews, they're doing some type of pretty crazy sale. So take a look into it.
All right. So one thing I did want to point out, if we're looking at this, so okay, just going back throughout the year, we can see that volume. This has been like average volume around here. So we can see as the year has gone on, this stock has been increasing in volume. And that makes sense because we know there's been more chatter about space stocks because
Space.
of
Yeah.
SpaceX, because of Rocket Lab, because of UFO,
Space exploration.
space
Yeah.
exploration, data centers, all of that. So the volume going up, that makes a lot of sense. But one thing I did want to point out, we can see this time frame, May to June. Look at the volume, it's all green, meaning that there's a lot of buyers in this position. And we can see during that time, that's when that stock was going up as well. And then what happened? At this point in time here, you see it had a high amount of volume, meaning that there was a lot of transactions that was going on with the stock. And what can we see? We see that the stock pulled back drastically here. And so from this top here, it pulled back. And all that volume that was happening is from we can see that on the stock chart. And it's red because it pulled back. That means that it was more selling transaction in this time frame. And so just from that, you can see that, okay, we had a lot of volume. You can see that it's ramping up. And then now it pulled back. And then we can see that why it pulled back because there's a lot of volume in that position. So yes, understanding that volume drives price actions, that lets you figure out, okay, what's actually going on with this stock? Is there going to be a move with this stock, or is it just stagnant because the volume has been averaged out over time? So volume is a good confirmation tool to let you know what's actually going on with the stock.
Nice, nice, nice. That was a good one. So I guess we're just going back and forth between screen sharing because I'm about to
Screen
share my
share, right?
screen. Yeah. So the next thing I'm going to go over now is moving averages. So let me share my screen. Hopefully you guys are finding some value in this. We're just trying to do our part, help people out
For sure, for sure.
for free, of course, no
For free.
charge for now. All right. So looking back at the same chart, right? I'm going to be talking about moving averages. So moving averages are basically an average of a price over a particular period. So one of the common moving averages you'll hear is a 200-day moving average. So I'm looking at the daily chart right now. I zoomed out a little bit and we have this purple line that just appeared. This is a 200-day moving average. So how does the 200-day moving average or any moving average work? What it does is it gives you the average price over the last 200 days. And every time we add one new day, one day is taken off from the back for the averages. So the oldest day is basically removed from it. So tomorrow, let's say tomorrow is day 200 in the average, that means day number one will be removed. And the day
Yeah.
after tomorrow, that means day number two, which will have become day number one by that point, will be removed. So what you'll see here is that the moving average 200 day is going down because the average of the prices are going down, which means the average is being dragged down. That's one thing on simple moving averages. The other type of moving average people tend to pay attention to are exponential moving averages. So I'll show you that here. And let me take this off. An exponential moving average is very similar to a simple moving average. The main difference is that recent price is weighted more heavily than historical prices. So older
Mm.
prices don't matter as much. So right here on my chart is the daily 21 EMA, and I'm going to put the daily 21 SMA on it. Before I put it, guess in the comments, what do you think is going to be the difference between the two of them? If the EMA is more weighted towards current price, what do you think that means? So what it means is that the EMA reacts to price changes faster. So if you look at this, the dashed line is the EMA and the solid line is the simple moving average. You'll see that the EMA is a lot more quick with its movements. When the price moves up, the EMA goes up. When the price moves down, the EMA moves down faster because these recent prices weigh a bit more.
Reacting to the recent
It's
prices more.
it's
Yeah.
reacting exactly. So the EMA reacts to recent prices more, so you're able to detect the move slightly faster than a simple moving average. But for the most part, it really looks like they're the same thing. One of them is just ahead of the other. So thus moving averages for you, simple moving averages and exponential moving averages, EMS. Going back to the 200 one, I'll add it back here just for comparison. Because it's 200, you'll see that it's moving a lot slower. So the 200-day moving average, this purple one, and this blue line is our 21-day moving average. You'll see the 21 almost follows the stock, maybe like a few steps behind it, whereas the 200 seems to be lagging. Like it was going up this whole time and never really went down. It has small dips, but never really went down up until here. So first of all, the 200-day simple moving average is probably the most popular indicator outside of volume, but I don't consider volume an indicator. You kind of have to have volume to invest
Yeah,
and
you have
trade.
to have that in there.
You got to have it. So I mentioned it's one of the most important or popular ones. And the reason why is because it is a long-term indicator of trend. It doesn't, as I showed you, it doesn't move quickly. It doesn't move fast. So when it's moving or when price is reacting to it, it means that something's actually going on. So traditionally, what people use it to identify is whether we're in an uptrend or a downtrend. So when price is above the 200-day moving average, it's considered to be in an uptrend. And when it's below it, it's considered to be in a downtrend. And as you can see, that kind of tracks because of how slow it moves. One thing you'll notice is a lot of times when you're above the 200-day, the first contact that it makes with it, people use that as a buying point. So when we come down to the 200-day, you'll notice a lot of times you'll bounce off of it. People are going to buy, they're going to buy, they're going to buy because the 200 days that there's that signal. And a lot of times when you lose it and you go below it, when people touch it, when the price touches it, people sell it. So that's not the greatest example because we went through once, both times. But I think recently, okay, perfect. Recently, you'll see that what happens, we get to it, it sells off. People are selling it. We got it here. It looks like this was earnings. Yeah, we had an earnings with abnormal volume. That's why we got so high. But when we came back down, we got close, sold off. This is not that close, but look, we came back up here. We looked like we were breaking through it. And what happened? Sold, sold again. So 200-day moving average is a good indicator for overall trend. And the smaller the time frame, as I mentioned, the less significant the move, which also applies to indicators. Higher time frame indicators are a lot more significant than lower time frame indicators. So that's what I got for you on moving averages. Obviously, there's a lot more indicators out there. There's some of them right here, just some of the ones I use. I'm not putting that for anybody to show. I was just showing they're there. Um, but it's a personal preference thing. Use what makes you happy or use what aligns with your investing or trading strategy. There are no right or wrong indicators, but there's basically an indicator for everything. So find the one that works for you, find the one that makes sense for what you're trying to do in the market and use that one accordingly.
All right. Like that was a good description. I was gonna say just leave the chart on there because I did wanna point something out. So we've talked about time frames. We've talked about support and resistance. I talked about what candlesticks look like, what volume is, and then you just went over moving averages. Feel like if I was listening to this, I want to know how we're using all these indicators together to understand charts better. So if you don't mind showing like where we have like if you have a chart that has all
Sure.
of that put together.
All right, let's do it. Okay. So this
Do
is
you want to
meta we're
do
looking
this?
at.
You want to do this chart
Yeah,
or
I'm gonna
okay.
switch it up, and I don't have anything. This is a new chart, so it's a good opportunity for me to chart it.
All right.
SpaceX. I think SpaceX has been on the chart for like 12 days. One,
Like a
two,
month,
three, 4, 5, 6, 7, 8, 9, 10, 11,
like
12. Exactly 12. Look at
12
me. I be
two
I be in them
weeks.
charts, boy. I be in them charts. Oh man. All right, cool. So we're looking at SpaceX. As you can see, I don't really have anything on this chart. We mentioned in our previous episode about how we tend to just watch new companies that have IPO'd as opposed to investing directly into them. So that is the case here. I have not invested into SpaceX. I do check the price here and there, but I don't really keep up with it because I don't intend on doing anything yet. So that's why this is a blank canvas. So when I'm looking at a chart, first thing I want to do is I want to zoom out. So let's zoom out further because I like to start on the weekly. If it's established enough, I'll start on the monthly. But SpaceX is relatively new, so there's nothing on the monthly. There's barely anything on the weekly. Um, I guess this is something. It went up and it came back down, and now it looks like we're going back up, but we don't know. Volume was really high that first week because this week it IPO'd on a Friday. So this was one day. Actually, this is kind
Yeah,
of crazy because this is one
for
day
a
of
day.
volume.
Yeah.
Yeah.
Hmm.
And then this was the first full week. This is the second full week, and this is our current week. So volume, you can't really say too much about it yet because this is just 4 weeks. You don't have context. You don't have like an average or a comparison yet. On the daily, you can see something a little bit more. So like I mentioned, this was just its first day of volume. So it's like everyone was in this company that day. And what is this volume? 523 million. You can see it up top right
Sheesh.
here. I can't point to it, but on this line right here, this is where you can see your volume. And for SpaceX, it was 500 million that first day. So that is insane. But now that we're on the daily, you can see more of a trend. You can see that it went up and we hit a high of 225. This is why I like TradingView. I marked mine so that it tells me the high and the low of any chart I'm looking at. So I don't have to like try to track it with my eyes. I can just look. The high was 225. The low is 147. So over the past 12 days, we have maybe like a $80 range between SpaceX trading, and we've seen that volume has dropped significantly since it opened up. All right. So we're still zooming out, still looking at it. Then one thing I want to do is I want to look for some key levels. So when I say look for key levels, what exactly do I mean? Sorry, I'm turning so that I can talk into my mic and still do this. Let me fix this. All right. So key levels, I'm looking for levels where price is touching, where price is holding. So because this is a new IPO company, I would probably say that the opening price where it opened is a good basis because you don't really have too much historical price action. So wherever it opened from for IPOs is usually a good price to watch. That's not like a rule or something. It's just something I've noticed. So if I put a line here and I'll adjust it when we get to a smaller time frame, I would say this is a support level. I would say there's probably a resistance right here because I can see this candle, this candle, this candle, and then this one all around this same line, but we'll see it once we get to a smaller time frame. So now I'm going from daily to 4 hour. All right, so on the 4 hour, this is kind of what I was just saying. You can see that price, as I mentioned previously, this is what support does, is holding above this price. Umar talked about candles. We see wicks through it, which does it matter? Yes. But as long as there's no full bodies down through this level, it's nothing much to worry about. So we see these wicks going through it, and we can see that the support is holding at this point. So that's interesting to see. And let's go down from the 4 hour to the 1 hour now. So the 1 hour is where, for me as a trader, this is where I get busy. This is where I start to like actually see what's going on the chart. So now that we get to the 1 hour, I can see things a lot better. So what am I seeing? I'm seeing that this price, this held, even though we did lose it. What does this say? This says, if you look at the bottom of my screen, it says 3 a.m. If you look right here, it says 8 a.m. Uh, if we look right here, this says 8 a.m. So there was no real market hours where we were below this. This was mostly after hours and the market opening, first hour of the day. And we know as investors and traders, the first hour of the day is the most volatile day of the market. So we can kind of excuse that. And I mentioned that there's probably another level of resistance somewhere here. I'm able to see it a little bit better now. So right here, I would put a resistance line right there. And maybe like right here. Mind you, this is how I see the market. So how I see the market and how you see the
It's
market
not
might
gonna
be
be the
two
same
different.
way people. Yeah,
Exactly.
exactly.
Everyone trades differently. Everyone sees the market differently. But based on how I see the market, this is how it lines up for me. And as you can see now, we've added these lines. It looks like there's like a rhyme or reason to the chart now. So had I been looking at SpaceX yesterday, because this was today, maybe I would have shaken a trade right here, because if I hit this replay tool, it's another reason why I like TradingView. If I hit this replay tool, I can show you what it looked like. So this is what it looked like going to the morning. This morning coming into the market, if I had looked at this chart, I would have charted this like this, and I probably would have been like, there might be a chance for a move to the upside. Why? Because we broke through this resistance and we came back to retest it. So I would be watching to see if we lose this level. As long as we don't lose this level and I can see some good volume during today, which already happened, that's something I would like to do. And what else happened? We look at our 21 SMA and our 21 EMA. We went from chopping between them to going above them. So one thing about being in the stock market is confluence. Confluence is something that makes you confident in what you're doing. The more confidence you can get, the more confident you should feel in the position you're entering. So what's the first thing I said? The first thing I said was that it looks like we're retesting this resistance turn support level. So that's one. The second thing is this indicator right here. We broke above it and we look to be coming back to retest it. So I would like to watch that. That's number two. Number three, volume. I want to see what the volume looks like during this trading day. When the market opens, what does the volume look like at this point? I would assume that volume probably spikes around this point because people are probably seeing this as well and they're going to buy it. Although we've already seen what happened, I didn't look at the volume, so I don't really know. There might not be no volume, who knows? But I would predict that there's going to be volume there. And the last thing is the type of candlesticks. As Umar mentioned, different candlesticks mean different things. So like if you see this right here, notice how this candlestick has a really long wick under this level. So that means, and you can see there's a lot of volume there. That means sellers who were in control up until this point where buyers were like, all right, y'all did enough. We're not letting the price go below this point. This is where we want to start buying it from. And what happened after this? We started an uptrend. So if I see good volume, good candlesticks here, that's something that I could potentially do. And I'm going to do this. I'm going to hit the play button here so we can see it play out in real time. Really good bullish Marubozu candle, as you called it, right? Full
Hmm.
green candle right here. Notice how like I said, we didn't lose this indicator and we did not lose this level. You see this candle, really green candle, all green throughout. We have a wick at the bottom. It's not too big of a wick. We have a wick at the top. It's not too big of a wick. But the biggest thing for me here is that this candle completely consumes this
Green.
candle. So
Yeah.
yeah, really green and consumes this candle. So that's a good sign. Then what do we have? The next green candle is even higher in volume than the previous one because the market just opened. So this is technically only 30 minutes and this is the first full hour. What we see, a really green candle with volume, and we're pushing away from this, from our indicators here. So this could have been a really good opportunity to make some money. It went from 160 to 168. And I'll hit the play one more time just to see how this goes out. I would assume we probably reject here or we start chopping up top here. And what happened? We rejected this resistance up top here. And now we're approaching it again. We're still going. Notice how volume is reducing at the bottom. Notice how volume is going down gradually here, is going down. Eventually, we get a red candle. So I'll get out of the replay now and see what actually happened full. So up until the close, we
It's
kept
right
pushing
there.
to there. Yep, it's right there. We don't have any volume in the end of the day because this is after hours, but what was this? 2 p.m. right here? This 2 p.m. 2 p.m., 3 p.m. candles. It looks like we're right there. So if I was a SpaceX trader, I would probably be looking to see if we break above this tomorrow, and if we hold above this line, that's probably another entry towards the upside. So it's just a little game for y'all and how I look at charts. Umar might have a different process, but like I said, I like to zoom out, start from the higher time frame first, then I identify my key levels. I look at the candlesticks, I look at my indicators, I check volume, and try to keep it simple. As you notice, I don't have too much on this chart. I have 3 lines, I have 2 indicators. And honestly, I'm not even using both of these indicators. They just happen to be here from my previous example. So I used it. Normally, I'm only using this, the 21 EMA. I just had the 21 simple moving average on my charts to show you guys the difference. But normally, this is how my chart would look. It would have just this one on it. And that's all I need. That's all I need with my volume and being able to identify candlesticks. And like Umar and I mentioned, we it's a skill you obtain over time. We weren't always able to interpret charts. We weren't always able to read charts, but with time, spending time with them, looking at them, you begin to get accustomed to what you're looking for and what you're trying to do in this chart. So that's that on that. I think I've rambled enough on this, so I'm going to unshare, pass this back over to you.
Hey, Professor. No, but that was really good. I feel like if I was someone that had no idea of what I was doing on a stock chart, if after seeing that, I'd be like, "Hey, let me go replicate what Dami did on this chart. Let me go see if it
Exactly.
makes sense to me as
Exactly.
well." But I mean, that was really good. Like you said, starting off, you first zoomed out. Like even SpaceX, I mean, SpaceX doesn't have that much time, but we looked at the monthly. From the monthly, we went to the weekly, to the day chart, to 4 hour, to an hour. That's kind of how you start. And then, like you said, it provides a lot more information as you go to those lower time frames. But like we saw that, okay, on I think it was the weekly, you put that support level, or that level for it to know that, okay, we see that it's now going below this price, okay, we can confidently say this is the support at that point in time. So we identify the key levels. And like you said, we use the candlesticks to see if there's a reversal happening or if it's not, or if it's rejecting the support or the resistance. And then also using the volume. I like that example where you show on that next day, you saw that the volume was more than the previous day, meaning that there's a lot more activity that was happening. And so those are all the steps you need to confidently make a decision based on looking at a stock chart. So that just leads me to the next thing. Like some mistakes that you want to avoid when looking at a chart is the analysis paralysis. I feel like I've heard people say this multiple times that they don't look at stock charts because it seems too complicated. They don't know what indicators to use. How am I going to be 100% accurate? One thing you need to know is that, like Dami said, you don't need to be 100% accurate. What you're looking for is confluence. What are some ideas that you have? What are some things that you can see on the charts? And how many of those are supporting your argument? If you have multiple things that are supporting your argument, then you have more conviction in what you're saying. And so there's no way you're going to have a crystal ball. You're just trying to be more confident in your decision. And so you don't need to have 5, 10 indicators on your chart. Like we've seen just now, Dami had maybe 3 indicators. You had the volume on there, you have your horizontal lines to show your support levels, you had the moving average. That's really what it was. That was 3 indicators on there, and he was able to deduce everything he just showed, and we can see that that was actually making sense. And so you don't need to have your chart looking like a Christmas tree because one is just going to confuse you even more, and then two, you're not even going to be able to make a good enough decision because you're going to be like, this feels too intimidating. So start with the basics, put the indicators that matter for what you're trying to do. So if you're a long-term investor, put that 200-day on there because that lets you know what the long-term trend is. If you're a day trader, if you're trying to buy options, okay, add the 21-day moving average. Be on the 5-minute
Yeah.
time frame.
Yeah.
Yeah,
Mhm.
exactly. So yeah, stuff like that. So just knowing what exactly you're investing for and not
Mhm.
overcomplicating it. Those are some of the things you want to make sure that you're doing. Another thing that I feel is a big one, because I've done this before, is confirmation bias or trying to see what you want to see. There's been times where I felt that like this stock, there's no way like I'm going to make money from this stock, so I chart it in a way that makes me think it's in an uptrend. But if you're doing that, you're basically confirming that you have bias towards this chart. So what you want to do, like I think the steps that we pointed out initially is that's ideally how you should mark a chart. And if you do that, that will remove every bias that you have. If you're zooming out, if you're drawing the key levels, if you're showing what the support and resistance are, those ultimately will dictate what those price targets are. So you won't even have any bias going into the chart. And so making sure you're able to alleviate that, that would remove those biases that you have to try to make the chart seem more enticing than it actually is. Yes, but yeah, those are the main mistakes that I feel like people should avoid when they start looking at charts.
Specifically, analysis paralysis. Steph Curry shoots 40% from the three and is the greatest shooter of all time. Nobody has a crystal ball. Nobody gets
100%.
all
Yeah.
of their investments right. Nobody gets all of their trades right. But like you said, if you use confluence, if you're able to put a few things together and make them make sense, you can have a higher conviction level. You can be a lot more confident in the things you're doing in the market. And,
Yeah.
you'll be right sometimes, you'll be wrong sometimes. That's just the name of the game. That was good. So you talked about mistakes. I'll go into some best practices that people can use. I'll just state it from my opinion. So I mentioned one already. Start from the top down. You got to start from the top down because, as I showed you, the top down is what gives you direction for what's happening on the smaller scale. If you start from the smaller time frames and try to work your way up, you're gonna do what Umar was saying. You're gonna see what you want to see. Whereas if you start from the outer and you work your way and become a little bit more refined in each view, you'll see that you're able to find things that either confirm or do not confirm what you're seeing on the higher time frame. So you got to start from the higher time frame. Secondly, you got to combine both lenses at which you're using to understand charts. What I mean by that, I mean by you got to combine fundamentals and technicals. So
Hmm.
fundamentals are good because they let you know what companies to buy. They let you know what companies are good ones. But
Hmm.
the technicals let you know where. So like as I
Where?
just showed you, let's say that wasn't even a SpaceX. Let's just say it's another company because SpaceX is new. People have mixed feelings on it. But let's say, like I showed you, Meta. Meta is generally a really good company in the stock market. Then we looked at the chart. It's not doing great right now. So maybe I don't want to mess with it right now. Or maybe this is the time I want to buy it because it's not doing great and it's on discount. Depends on how you're building your portfolio and what you're trying to do. But I say that to say combine fundamentals with technicals and you'll have a better experience with investing. Using one by itself is okay, but using both is back to our word, confluence. It's better. And then my last one would be plan your trade and trade your plan. That's something a lot of people say in the stock market, a lot of traders say, and it comes off like a cliche saying, but it's something that you really have to ingrain into your mind. When I was displaying my chart, I said one thing that the way I see the market is different from how Umar sees the market, is different from how you might see the market. And that's to say that kind of leans into the saying, plan your trade and trade your plan. I'm not going to do what Umar is doing on his chart because what he sees might be different from what I've seen. That doesn't mean one of us will be wrong and one of us will be right. We can both be right and go about things differently, but go about the plan that works for you. Go about the plan that makes sense for you. Don't get into the trading day or your investing day and start doing stuff that you didn't plan to do. If you're going to war right now, if you're a general in war, you're not making your plan for attack in the middle of the battle. You're planning for your attack prior to even heading to the war zone. So that's how you should think about the stock market. Every day in the stock market is a battle and your money is the soldiers. You want to make sure you keep as many of your soldiers alive as possible. Plan your trades and trade your plan. So that's the best practices I would give you and just keep it simple.
That was good. That was good. I like that one. Trade.
Trade
That
your
was
plan, plan your
a
trade.
trade. Yeah, that's a good analogy for sure. I
You
mean,
see, I
that's
said,
like
you see, I said it like 3 times. I was talking to myself.
but no, I mean, that makes sense. Like you said, you don't wanna make that decision at the spur of the moment because most time, if you're doing that, there was no plan to begin with. You're just making that on the fly, and if you're not well prepared, you know what happens on the battlefield. You get smoked.
Is also emotional because you're biased
Uh-huh.
based off of what you're seeing in that moment.
Mm,
You're not having an unbiased view. You probably feel the same way. There's something about when you look at the market while it's moving that makes your heart race compared to when it's not moving at all. After hours, when you look at the market, the feeling is different than when the
it's
market is.
different, exactly. It's like, "Oh, market's closed, nothing is
Yeah,
happening." Yeah,
exactly. Yep.
that's good, that's good, that's good. Alright, man. I think we did a good job with this one. I mean, I think there's a lot of information for people to get, especially if this was new information for them. So,
Yeah. Hopefully someone watched this video and we've expanded their horizon on understanding how to look at charts, and we've made
mhm,
at least one thing more clear for them. And if we did do that, share this with a friend. Make sure you like the video, subscribe if you're not already, but share this with a friend because, like Umar said, we're doing this because it's something we're passionate about, something that we like, and we're trying to help people in the areas that we struggle with when we started our investing journey. So hopefully this helps someone out there.
definitely, definitely. Alright, so moving on to everyone's favorite segment, is it making sense? This is where we bring up the real life or made up scenarios and decide if it's making sense or not. Alright, so I have one for you. So we have a long-term investor who says that he doesn't look at charts because he's just buying index funds and he's holding for 20 years, so he doesn't need to look at charts. Is that making sense or not?
So that's an iffy situation
Mm,
because the context that you gave there is that he's buying for 20 years. So, all
for a
right,
long period, yeah,
yeah, if we're being honest, if you intend on holding something for 20 years, the price does not matter as much.
as much, yeah,
It still matters, but it does not matter as much. I'll give you that. If you buy anything good in the stock market after 20 years, it'll be up a lot for sure, as long as it's a good company. But where I disagree a little bit is that just because it doesn't matter as much or just because the price is definitely going to go up doesn't mean you still can't get a better price. For example, the S&P is at 7,500 right now. Early 2000s, I don't know, let's throw a number. It could have been at 1,500, which it wasn't at
mhm,
1,500, but I'm just using it for math. It could have been at 1,500 and you had $3,000, so you bought two shares at 1,500. Now you have two. But what if it pulled back to 750? Rather than buying those two, you can afford four. You know, is that a big difference? Yes, you have double the amount of shares. So over a period of 20 years, those two shares is 7,500 right now, 15K. That's the difference of having 15K versus 30K. All you did
mhm.
was buy at different times. So it matters. I think that example in itself shows you that it does matter. But I understand what they're saying, but you're kind of limiting your gains. I'll say that. So it does not fully make sense.
Yeah, I'm with you there because ideally, yes, if you're buying index funds, especially if you're like dollar cost averaging, it shouldn't really matter what price you're buying at. But that's honestly, that's the reason why people push dollar cost averaging is because that's also like a lazy man strategy where the work is minimal. But if you want to maximize your returns from your investments, you have to eventually move away from that lazy man strategy and then actually put the effort in into actually having better entries. And that effort is looking at charts. And so, yes, he's already doing a good job investing for the long term. But now, like, how can we improve this strategy? And the improvement is by looking at the charts, understanding what the trend is with this. Like, when is it pulling back, or what is the price target that's pulling back? When it pulls back, okay, now let me deploy more capital. Like Dami said, the difference between owning 2 shares or 4 shares could be 15,000 in the future. Like, and that's just by buying at the right price. So it's halfway making sense. It's like he did the first part right, but now like how can we improve that because we want to
Mhm.
maximize what we're doing.
How can we
So
make it better? Exactly.
yeah.
All right. So now I have one for you. So we have someone who this person invests strictly based off what they get from their friends or what they get on the internet. They were told to buy stock 125. Stock 125 is down like 30%. It just crossed below its 200-day moving average. And this person told them to buy it because they said it's at a major discount. But they never looked at a chart. They never did any type of fundamental research into the company and they just bought it. Is it making sense or no?
That's not making sense. that's like someone tells you that, oh, there's gold at the bottom of this mountain, but you have to jump to get it. It's like they're telling you something, but like you're just believing it blindly. Before you get to
There's
that
good
goal,
now. It's not blind now. There's
okay,
good.
but okay, before you get to that goal, if you jump off the mountain, what's gonna happen?
Catch
You're
my
gonna
good. No, that's a good analogy.
you're gonna because you can't even get the gold, and so I feel like it's the same thing here. It's like, okay, they told you a stock is at a discount. Now, thanks for giving me this financial tips. Let me go do my own research into the stock to figure out, okay, what exactly is going on with this stock. Like you said, like it's down 30%. There's a reason why it's down 30%. Did something happen? What are the fundamentals saying? Is this a good company or not? Or and then is this ultimately in a downtrend? Does it look like it's reversing anytime soon? These are things that you can tell from the stock market or just doing a little bit of research. You don't want to blindly just put your money into an asset because, like I said, the number one rule is we don't want to lose our money. And so just throwing money away, we don't do that over here. So yeah, so
Yeah.
it's not making sense.
Yeah, I agree. I agree. I don't even have much to add there besides the fact that had they looked at it, maybe they would have been like, oh, this stock is a good company, but this is not a good time for me to buy because I think it's going to
Mhm.
continue going downwards. Because the one thing people don't talk about is like buying during us when a stock is going down is cool until the stock keeps going down. Perfect example is MicroStrategy right now. And I talked about it a few episodes that I said I sold my position in it. And I'm
Yeah.
so happy I sold my position on it. That thing is
Well,
at
it's
like,
still going down.
bro, it's like at $89.
Sheesh.
This stock was at 500 like end of last year. Like second half of last year was at 500 or something. It was like at $89, $90 today.
Nah,
I
that's
saw
tough. That's
I was
tough.
like, thank gosh I sold it. But that's some of the stuff you have to maneuver as an investor.
Mhm.
If someone told me, oh, go buy it at 200, because it's
That
at
is
a
cheap.
discount.
Yeah.
Yeah, that's how I would have bought it at 200 and now it's at $80. You've lost what, 60% of your money right there. So it's
Bro,
some it's something
like
to keep in
you
mind for
you
sure.
like and then you can't do nothing to the person that told you. You're gonna fight them?
I told you I didn't make you buy it. And you know what they're gonna tell you? They're gonna tell you, if there's go at the mountain and I tell you to jump, are you gonna jump? That's exactly what they're gonna tell you. So yeah, do your own research. That's why we say it in our episodes. That's why most financial shows or they say do your own research because trading, investing, there is risk involved with it, and you are the one that will be ultimately responsible for the
For
risk
that,
you take.
yeah. For sure, for sure. Alright, that was good. That was
All right. So that was good. That was good. Let's move on to the next segment of the show. This is a part I like where we can talk about economic updates, things going on in the economy, things going on around the world, and just crazy stuff that our president does on a week to week basis.
we need to have like our own like Trump segment.
Give me an episode. I'm gonna come up with something.
Alright, bet.
All right. So where you want to start?
I think Bitcoin, because we've talked about Bitcoin a bunch on here, but we saw that it hit 58K, I think today.
Yep.
So that I know like at the beginning of the year we were talking about crypto and then you said your price target was actually 55K. So how do you feel about that? Do you feel like it's still gonna pull back more? Because this is like just to paint a picture here, Bitcoin was deemed like this like alternative currency that people can invest in. But throughout like this whole AI like bubble, I won't say bubble necessarily, but AI boom, we haven't really seen any like movement with crypto. So do you feel like there is a possibility there or is gonna still pull back?
I said 55K for a reason because that's what it's supposed to do. Um,
Yeah.
so 55K was like my number of where I thought Bitcoin would hit. I don't think we go under 50K. Like I don't think we touch 49, but who
Mm,
knows? Could. But I really do not think we touch 49 at all. I don't think we leave the 50s. I also in my thing, I also said that we'd stay in the 70K range for a long time. So I think we still end up going back up there and being in the 70s. But ultimately, if you know anything about crypto, we talk about it's a 4-year cycle, and this is what it's supposed to do. It was supposed to come back down. It's supposed to pull back 70 to 80% from its highs. It's what it does every 4-year period.
4
So
years. Mhm.
this is kind of what I expected from Bitcoin. Um, it's kind of slow, but when you think about it, this is a 4-year cycle, so that's what it's supposed to do. Um, I don't know. I mean, I'm buying Bitcoin. If we get scammed, then we hope shoot, the whole America got scammed.
I mean, I guess the whole America got scammed. Your president is not getting scammed though. I read somewhere that he made $1 billion from crypto last year, from all
Man,
like the
he
meme coins, the
he took my
crypto
money too,
venture.
man. I bought Trump coin. So this is all right. This is a lesson in investing. Don't be greedy. So I bought Trump coin. I actually bought it relatively early. I don't remember what price I bought it, but sadly said I still own it. So when I bought it, when I bought it, right, I don't remember what price I bought it, but I remember seeing on the internet people were making money because they got into it like the first day, but you couldn't
Mhm.
just buy it anywhere. So I had to download this other app, which I would not give them a shout out, so I can get Trump coin. And I got Trump coin relatively early. I only put $100 into it, just like I was like, let me just see,
Yeah.
and it went up like 100% in
For
maybe
real?
2 days. Yeah, I was up 100%. And
And you didn't sell?
instead of me to take my money, I was trying to be greedy like everybody on the internet. I was seeing people were making 1,000, 2,000, 3,000.
Oh my
Oh yeah, I'm about to
goodness.
get my Trump coin money, and I screwed myself over.
Oh, nah, you gotta sell that. You gotta sell that. Especially like me, like meme coins like that. Oh, I gotta sell that.
So we talked about SpaceX. Something I saw briefly is that SpaceX will be added to QQQ in the next week. Crazy stuff.
That is interesting. That is interesting because there's usually like a long process before stocks can be added to like these ETFs, isn't there?
Yes. I don't know how long it is, but
Mhm.
normally it's a longer period. But there's this new rule, it's called a fast track rule. And because of that, SpaceX will be added to the Nasdaq 100 in the next week or so. And the fast track rule basically states that if a company is in the top, I want to say top 10 of market caps, then it can be fast tracked to ETFs. So it sounds like
Interesting.
this rule was made specifically for this
Specifically
situation.
for
'Cause,
SpaceX.
I mean, I've never heard of any company IPOing in top 10 market cap.
Yeah, definitely. I mean, yeah, that's interesting. I did see also that SpaceX was, I think the whole there's an argument that they're trying to add SpaceX into like 401ks
Retirement
also.
plans.
Yeah, retirement
I saw
plans.
that.
And then
I think that's
people
some
were
Trump and Elon buddy stuff right there.
mm, and then people are saying that they don't want that to happen because okay, what
Mhm.
happens if
When they
SpaceX
sell
that
it all.
yeah, what happens if they start selling or it starts liquidating? Now, that's also going to affect people's 401k's value and stuff like that. So,
Yeah. Just like think of your 401k with Tesla in it and having to go through those ups and downs. I'm good.
nah, for sure, for sure.
I don't
Um,
even wanna talk about this Iran Strait of Hormuz stuff anymore because we've said everything about it at this point.
I mean, they said that on one end they said the deal was signed, on the other end they said like there's no deal. So what is true exactly? What is true?
Everything is true, nothing is false. They literally have told us everything. The only thing missing is for Trump to tell us that we give up, and you know he'll never say that.
Like that's definitely interesting what's going on with that situation. Hopefully we get more clarity as the weeks go by.
Oh, earning season is coming back up.
Mm.
You know earning season always starts with the banks and Netflix. So be on the lookout for that. When we drop this episode, the following week will be bank earnings and Netflix.
Be on the lookout for that one. That's a good call out.
Anything else from you? Anything else you want to touch on or talk about?
No, I mean nothing economy wise. I think for episode, I think we did a good job in just breaking down the stock chart. feel like this is one of those episodes that people should definitely go back and look at or just pause. Or I think also that section where you're doing the charting, they should definitely try and replicate that or try and understand that a lot better. But I think this is more of just like an educational episode, and hopefully people get good value from it.
Yep, yep. If you found some value in this episode, pull up a stock chart right now, any company, and tell us if it's in an uptrend or a downtrend. Just pull up Nvidia, tell us uptrend, downtrend, SpaceX, uptrend, downtrend. It doesn't matter what you see, but just, get into that habit of looking at charts and, tell us what you see. See what people have to say about that. Anything else from you on this episode?
No, you got it, big bro. I don't know where that came from. I think it's time. It's time.
Time to go. Clearly, it's time to go. All right. All right. Cool. Well, we appreciate you guys for coming to join us to another episode of Common Sense Pod. We're almost at 20. Just like that, we're about to be at 20. If you haven't already, make sure you like, comment, subscribe, follow us on our socials. We appreciate you taking time out of your day to check out our episode. A few things I would like to leave you with. Avoid some of the mistakes of analysis paralysis and, focusing on what you want to see as opposed to having an unbiased opinion on the market. Keep things simple, trade your plan, and
Let's make money.
let's make money. I like that. Thanks for the save. Let's make money. I'm going to challenge you guys. Before you make a purchase in the stock market or a trade or anything for your next time you are in the market, open the chart up and take a look at it just for 2 minutes. You don't have to do nothing special. Just look at it for 2 minutes. Check so you can identify if it's moving up, if it's moving down. Try to see if you can identify the support and resistance lines. You might not even get it right, but those 2 minutes, that's 2 minutes more than most people put towards it. And hopefully that 2 minutes becomes 5 minutes and eventually it grows into a habit where you're able to read charts because of this episode. So thank you guys once again for joining us for another episode of Common Sense, where we're trying to make sense of our sense. We'll catch you on the next one.
Peace.